First up on our corporate radar is Brigade Enterprises. It has had a good year with realty sales growing 9% year-on-year, collections rising 51%. Can the good run continue in FY23 as leasing business and hospitality also kick in? R Jaishankar, Chairman and Managing Director at Brigade Enterprises, joins us now. Mr. Jaishankar, good morning and thank you very much for joining us. What really catches the eye is the pre-sales that have grown by 9% in FY22. So that gives you some idea for the outlook for FY23 from this pre-sales. Can you outline, guide us in terms of sales and realizations?
Yeah. So thank you, Lata. Even in FY22, we would have done much better had we were able to launch more projects. I think we were able to launch only 4 million square feet or slightly less, whereas in FY23 we'll be launching about 8 million of residential and 2 million of commercial. So totally about 10 million. So that way we are positive with the outlook. And FY23 should be good, though sometimes it may be too early to say. We are just in the second month of the financial year. Okay. The macroeconomic scenario is something to be seen. And interest rates are marginally going up, have gone up for housing finance, but it should not have any major impact. The costs are certainly going up, which everyone knows due to commodity prices. So there will be some, impact on the prices. Overall, the demand is inherently strong, and the need for housing has been reinforced more than ever. Okay. And what is important as far as Brigade is concerned, we are, other than residential, we're in office, retail and hospitality. Right. Our hospitality business has bounced back very well. Right. And it is posting 8 to 9 crores of AGOP month on month from March. So that will turn the corner here in the absence of any nasty surprises of fourth wave. Right. And
Mr. Jaishankar, we'll get to the various segments, but let's focus on the larger segment, the real estate market. We'll focus on hospitality as well as on the lease rentals. Now, in the last year, your pre-sales volumes was around 4.7 million square feet, right? For FY23, what sort of a number do you have in mind? Also, in terms of sales value, last year was around 3,000 crores. For this year, what kind of a number on both these two parameters?
So our team is aiming at least 20% more, if not much more.
Okay. Mr. Jaishankar, good morning. Going by the last rate hike cycle, what can you tell us about whether it can hurt us, or hurt you rather in the demand, and whether there would be a bit of a postponement of sales? Just if you could give us some evidence, because it's just been recent. It's just been about 10 days or so that we know that we will be in a hardening rate environment. Go ahead.
Yeah, it is a big question mark. Yes, if you ask me, the price is same than prices going up. It is easy to predict, but the price increase is inevitable due to huge jump in costs. But I think generally the savings of the people in the last couple of years, more so during COVID, has substantially gone up, and it has to find its place somewhere. And now that stock market is also taking temporary beating, I would say, that some money has to come into the real estate. Okay. And it is no doubt one of the safest bets for investment. Okay. And apart from a need for housing, which is ever more reinforced.
Okay, all right. Mr. Jaishankar, you told us about the volume and sales growth of close to around 20% is the target for this year. But you also mentioned that costs have gone up. And the last time you spoke to us, you were telling us there's a need to push through price increases. Your average realization for the past year is in that vicinity of around 6,400 rupees odd. And for the fourth quarter, I think it's around 6,600 rupees. For this year, what are the price increase you've already taken in the first couple of months, and where do you see the realizations headed? Go ahead.
So we have taken a price increase of 5 to 7% or 5 to 8% depending on project, and the average realization, if I'm not surprised, should be closer to 6,900 to 7,000 rupees in the coming year.
So you're saying that all the cost increases could be passed on?
That is the desire. and ultimately market is the the decider whether it will absorb the cost increase or not.
Okay.
But every business will want to pass on the cost increase in order to be profitable.
Okay. So at the moment, have you been able to pass for Q3, for Q4?
Yes. We have already increased the prices by 5 to 8%, depending on project in this financial year.
Okay, all right. Let's quickly run through a couple of your smaller segments. The lease rentals, that's around 19% of your total revenues. In the past year, I think, you leased close to on 1 million square feet. You also said the pipeline of another 1 million square feet is what you have for the coming year. So for this year, what should that number look like? That's the first part. And also in terms of revenues, what should it do? I think last year you did a number closer to around 600 crores, but you have hinted you can do more, close to around 700 crores. Is that correct for this year?
But we are looking at 700 crores or so. We have 2 million square feet of leasable area, while the target is to lease the entire leasable area in the current financial year, because the number of inquiries from the software companies has gone up very substantially in the last 2 months. And there are a lot of closures happening, small to medium size closures are happening, number of them. So we are hopeful, confident, we should be able to reach 700 to 750 crores of revenue if the leases happen quickly. Otherwise, if the rent commencement starts bit late in the financial year, it may have some impact.
Okay, let's squeeze in a final question on your smallest segment, that's the hospitality segment. Occupancies have been going up, but ARR is still a distance away from what we saw pre-COVID. So where should both these two numbers go? Occupancies, I think you'll be trying to go to optimal levels as well. But what about the ARR? Where do you see that number headed?
So see, currently in FY22, the ARRs are about 72% of the pre-COVID level. But if you just take, last 2 months and all, ARRs are at 80-85% of the pre-COVID level, 80% or plus of the pre-COVID level. And the things have to improve as long as the international travel is not affected. So mostly FY22 was substantially managed by the domestic travel and domestic business. Once the international travel starts, which is just inching up, the thing should look up very substantially. In fact, the big turnaround in business is in the hospitality sector. And out of our 8 operating hotels, the 3 hotels are performing better than the pre-COVID levels. And some of the new hotels which were started 2 months before the lockdown of 2020, they're just trying to stabilize themselves.
Okay,
so we are confident hospitality has turned the corner.
Okay, that's good to hear. That will impact a lot more companies and people. Thank you very much, Mr. Jaishankar, for joining us. Have a great FY23.